question here, let me have a little look. Does OakNorth look at funding for scaling groups who are only just at a break-even position, or would you only look at more profitable settings, Ben?
So look, it's a very good question, and I'd be delighted to pick it up in person in more detail. Look, the challenge is, ultimately we're a bank. We take what we call senior debt risk, and by definition, therefore, senior debt is for kind of known or near known cash flows. Now, the challenge, therefore, becomes one of how are we going to service our debt. So the short answer is, if there is a very understandable, obvious business plan that takes that business into cash flow positive territory and EBITDA positive territory, then absolutely. And the other thing to note is obviously we fund development transactions which have zero income until the end. So, yes, we do this. The particular situation will depend on what we will do and how we will look at it.
So each position on its own merits, isn't it, Ben? And there, as you say, every nursery is different. And as you rightly say, some of these startup new build nurseries, as I'm sure we've seen, very high capital costs having found the site and done the build. But then equally, it might be a great location, limited competition, and a great product offering, all fantastic. But you're then front loading costs in terms of staff recruitment, retention, operating costs. And it wasn't that long ago that some nurseries were taking 3 years to achieve a mature trading position. So it's not just the setup costs that are quite high, it's obviously the operating costs as well. But if there's a great prospect, then we've seen lots of groups grow quite significantly via organic developments because they've been able to offer something different, and that has attracted the markets. Their occupancies ramped up incredibly quickly.